Good morning, everyone. Elaine Lowe and Ken Shreve here, live at Investors Business Daily in Los Angeles. Today, we're checking in on CyberArk, Crocs, Alarm.com, and Disney. But first, let's take a look at those indexes. They were trading slightly mixed for a moment there, but now they're all modestly down, with the Dow down a hair, the S&P 500 down 0.25%, and the NASDAQ down about 0.33%. What's the big picture today? I know we have a Fed meeting that's concluding, but no surprises expected there.
Yeah, no surprises expected from the Fed meeting today. I'd say overall a pretty reasonable start for the market on Thursday after bullish gains for the major stock indexes Wednesday. We did get confirmation of a new market uptrend, so that's good for growth investors. Really strong day for the IBD 50 yesterday. Some technical breakouts that looked pretty good, and to see just, we're down modestly at the open, pretty reasonable start for the market. You can see the NASDAQ daily chart here holding above the 7,500 level and above its 200-day moving average, so pretty good start.
All right, so looking at our first earnings report of the day, CyberArk Software reporting late yesterday, pretty much blowing away expectations with third quarter earnings of 48 cents a share. That's up 92%, beating views for 27 cents a share on revenue growth of 31% to $84.7 million. That's better than views for $78.8 million. What's the word on CyberArk?
Well, this is a company that is very well positioned for growth. They're in an area of security. I mean, first of all, security software firms come in many different shapes and sizes. There are companies that specialize in firewalls, and then you have a name like CyberArk that really targets privileged accounts. One way that hackers get into corporate networks is by targeting accounts of sort of executive type people. So this is their bailiwick. They prevent that from happening. And CyberArk is bullish gap up on earnings, big earnings beat, as you noted, licensed revenue up more than expected. So pretty strong results across the board. Stock has given back some gains, but still holding a solid percentage gain in the early going. Okay,
and then moving on to retail, we have Crocs, the shoemaker, recording a surprise profit of 7 cents a share versus estimates for a 2-cent per share loss. Revenue of $261.1 million, better than views for 246. So pretty good quarter for Crocs, which has been on the rise for pretty much all this year.
Yeah, I mean, Crocs, still very good brand recognition. They've been around for a long time, has sort of had their ups and downs as a publicly traded company, but this does have the look of a turnaround story. Very good profitability, big annual earnings estimates for 2018 and 2019. Sales growth still in the single digits, but they've been getting lean and mean, closing some stores to achieve a better profitability, and this is a very bullish move for Crocs today, just a classic example of a breakout from a base here. 22.17 entry, and
still trading at the top of these session highs.
Yeah. So unlike CyberArk, which has given back some early gains, Crocs is holding gains, and this is just a really good-looking breakout here.
Yeah, big spike for them. All right, and lastly in earnings, we have Alarm.com. That one registering mixed results with earnings of 36 cents a share, up 33% on 24% revenue growth to $111.8 million, missing on sales.
Provider of cloud-based home security solutions, really a company that's got a great track record of earnings and sales growth. You look back over the past many quarters in a row, 20% plus sales growth consistently. This is just an example of a gap above the 50-day moving average. Whether or not the stock is buyable here, probably debatable. Maybe some aggressive traders taking advantage of this gap up in price today. You can see shares have been quite volatile when growth stocks sold off. Alarm.com got hit really hard, but nice gap above the 50-day moving average, technical sign of strength today.
Yeah, we'll see if it can stay above that 50-day by the end of the session, but seems like investors don't mind so much that sales miss for Alarm.com today.
Yep.
Okay, and then lastly, we have Disney earnings out after the close. Analysts expecting 22% profit growth on 8% revenue growth. We're expecting probably a pretty solid quarter out of the theme parks and studios segment, maybe a slightly lackluster quarter or flattish quarter for media networks. And all eyes will be on Iger's comments about the direct-to-consumer streaming platform, the one that's supposed to launch in late 2019, as well as any updates on ESPN Plus streaming figures, which launched back in April. They just passed that 6-month mark.
This is a stock, a Dow component that actually technically has got a pretty good looking chart ahead of earnings. It has been kind of dancing around a 118 buy point. You can see some volatility after a breakout over the buy point, but the stock has been back in rally mode ahead of earnings, and we'll see what the results look like after the close.
Okay. For more on Disney, Alarm.com, Crocs, and CyberArk, and more, make sure you're reading investors.com. We can also be caught across all of our social platforms. That's Facebook, Twitter, YouTube, and Instagram. So make sure you're checking us out there. Thanks so much for joining us. We'll catch you tomorrow morning.